Welcome back to the show. Let's get right to the headlines here. Stock market doom may mean crypto boom. We'll explain. And the SEC to approve a Bitcoin ETF soon. I wonder if that's mutually exclusive. Citibank getting into crypto. Look at this. SEC intimidation tactics still working very well out here in the market. Subpoenas delivered at a crypto conference, and Coinbase is feeling the heat as well. We're going to hear from Charles Gasparino, who continues to expose the SEC and the inconsistency when it comes to regulation. And I believe we're going to look at some information today that shows us proof of motive when it comes to Ethereum's benefit and the investors behind it and the creators behind it and the regulators even. Somebody roll that beautiful intro.
This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow me on Twitter at @BackupBradleyAbove and everything that we're talking about here today. $1.927 trillion market cap. We're still off 1.14% this morning. We see Bitcoin at 43,000 plus and Ethereum at 3,074, and we see Cardano at $2.16 and XRP at 95 cents this morning, looking like it's trying to fight back up that mountain. We do know to look out for those key back test support lines for prices. Could be 85 cents, 86 cents. We see on the low end of price, we actually went down to that range to 87 cents, and we see the high end is kind of where we are now at 95.84 is where we're at. So we do need to pay attention to that. And listen, we could roll over as low as 75, 76 cent range. So don't be shocked if that happens. But if we get below that, we definitely need to hear from the technical analysts on what's going on. However, some of them are saying we might be at that bottom, and this may be our moment to consolidate a little bit, and off to the races we go. We'll see. Looking right here, we do want to pay attention at times to the conventional stock market, which actually yesterday broke the worst day in 9 weeks as debt woes for China's Evergrande rattled the stock market. And this is what we called yesterday possibly the Lehman Brothers moment for China and their conglomerate Evergrande, which is off by more than 80% so far this year on its stock price. So now let's take a look at this right here, because this is what they're also leaning into, is that this ripple effect from Evergrande and this Lehman Brothers moment for China is rattling the rest of the market. However, you and I both know that $300 billion worth of liability default here doesn't rattle the entire market to the tune that we could lose 30, 40% correction across the board in stocks. You know, I always say, and I'm very cynical, and you guys know this, but, you know, there was a liquidity crisis before the pandemic hit. It's a fact. We were reporting on it. The repo market, the overnight gap, the Fed stepping in. Now they don't even report how much the Fed is covering overnight in the wholesale repo market for banks. So, you know, the reality here is that this problem, it feels like, is about to become everything we didn't want it to be. And it's going to be at our doorstep. And that's where, look, things run downhill. And if you live in the valley, you're going to definitely know what's going on. And, you know, the economists that we've covered here over the last several months and a couple of years have always told us there is going to be a day of reckoning. And especially since all the money printing is going on and the deliberate shutdown of the economy for the pandemic itself. So when we think of that, we think about the pressure that that puts on the dollar index. And the dollar index right now is at 93.14. You can see it is off quite a bit from where we've seen it before. And obviously this is a short look here, you know what I mean, just over the last several hours, 12 hours. But the reality here is that we know that there is a major inverse correlation between the dollar Dixie and crypto. So if this continues to break below and fall down, we know that that ultimately, unfortunately, is good for crypto and the market. Now, let's take a look at this, because the prospect of the looming collapse of one of the world's biggest companies, China's property developer Evergrande, has sent global markets reeling in the past few days, which is now being felt in the crypto markets as well. This is what I'm talking about, this narrative that $300 billion can send the whole market in a spiral, a downward spiral. I don't believe it. The markets are much bigger than $300 billion, and $300 billion is nothing to sneeze at. But I believe that this is foreboding of bigger things to come and something to blame it on that isn't the U.S. Looking right here, Bitfrost Wallet says their wallet release includes support for Songbird and is expected to be publicly released before the 27th of September. No invitation needed. Well, we're still waiting to hear from the bigger exchanges, so make sure if you know anything, if you find out anything, please contact me and send me. We want to get that out to everybody as soon as possible. Right here, the SEC could approve a Bitcoin ETF in late October, says Bloomberg Intelligence senior commodity strategist Mike McGlone. And this is interesting to me because I feel if we do see the approval of the Bitcoin ETF, it will be to give something a life raft, if you will, for the conventional investors to hold on to while the correction that we just discussed may take place in the conventional stock market. And I would not be surprised if the market continues to tank that we do see a Bitcoin ETF finally approved for that life raft. Citibank reports crypto is redefining the entire payment ecosystem. You don't say. We know Citibank's been a part of this mission for a long time. And it says basically what it does here is it says, look, we could go through a business model where we do an agent model, which means finding a third party to collect and hold their digital assets, or the other way is through a direct model in which organizations hold and control their private keys with their own wallet. Yet one of the biggest challenges for institutions is managing price volatility. When accepting crypto, an organization is likely to want to fix the price back into their functional currency. As a result, price flexes in crypto rather than fiat currency. While this provides the organization a tool to manage price risk, the real price risk sits with the crypto remitter, which is typically an organization's client or customer. Basically, they want to go ahead and launch their own thing, is what they're saying here, right? And they realize, and what they said here too is that, listen, they're like, look, this has turned into a $2 trillion market. We want to go ahead and launch what we're going to do, right? They're not playing around. They want to get into the game, and they've been wanting to get into the game for a long time. And again, this leans into the idea and understanding that we are seeing what? We are seeing real trouble and real tremors in the force when it comes to the conventional stock market. And we know that there's going to be a pay-to-piper moment. And if so, I think the biggest banks of the world absolutely are looking for that life raft, which could be crypto or crypto investment products like an ETF. Brian Armstrong, he says they're going to abandon the proposed plans to launch the crypto lending product, which the United States Securities Exchange Commission has argued is a violation of its securities law and threatened to sue Coinbase, and nothing says that that's still off the table. So intimidation tactics are still working, and it gets even further here. Ryan Selkis from Masari talks about a convention he had here in which they had SEC show up and deliver a subpoena to an actual speaker at that event. That's how they knew to find him there. It says, if you're wondering where I actually decided to run for Senate, it was when these people, these effers, came to my event and didn't buy a ticket and served one of the speakers a subpoena. Now, we know that, really Gary Gensler's SEC has been looking to do a massive power grab, right? And that's not been stopped by anybody, not Congress. You have seen no pushback from the CFTC or any other market regulator saying, hey, Gary, get out of my lane, right? You haven't seen any of that. Well, we're going to look at some information here in a second that I think might really straighten things up for all of us. But on the national level, Gensler has been increasingly vocal about the agency's interest in policing crypto company activities, including those in decentralized finance or DeFi space, which is the threat towards Coinbase. He suggested to the bloc during a recent conversation after a congressional hearing that the custodial lending and staking services may also fall under his agency's purview. A government report on stablecoins being spearheaded by the U.S. Treasury Department is expected to be published in the coming days and weeks. Now, we talked about this the other day, and I'm reading it to you to tell you that there is something coming here from the U.S. Treasury on stablecoins and cryptos. You better watch that one. An event that may serve as a springboard for further action on that front. And we'll see if it actually puts Gary Gensler in his own lane or if it gives him more power to continue to take this space underneath the SEC's wing or control. So look, this is Charles Gasparino. Shout out to Coining 203 on this one. I'm going to play just a couple short clips for you here so you can hear what's going on mainstream media and how Charles is really starting to expose the inconsistency of the SEC. Why did Ethereum get a pass but not Ripple XRP? Take a listen to these clips here.
As the currency that you can do that with. I mean, it's all pretty seamless, and it's advancing this technology known as the blockchain, which is, in my view, bigger than the notion of a cryptocurrency. That's just the sort of juice that flows through the blockchain. But, you know, back in the internet days, the SEC under Arthur Levitt back then, the Clinton administration, Congress, it was kind of, they let that internet thing, even though it was used for some nefarious reasons, as you know, the internet's used for nefarious reasons, it let it grow, prosper, become something that it is today.
I mean, XRP, though, specifically, was the first to get targeted by the SEC.
Well, here's the problem, Liz. I'm just making the point is, it's a contrast in what's going on now. The SEC is now literally enforcing and trust, in a sense, it looks like it's making stuff up as it goes along. Now, obviously, I would love to have Gary Gensler provide his side of the story, but look at it this way. Ethereum, the SEC is saying that XRP is a security, and they dinged Ripple, which created the XRP. Because,
by the way, very quickly, Ripple did not create the XRP. The business OpenCoin created XRP and gifted it to Ripple.
As they say, XRP is used as a as a way for Ripple to build out its technology platform, that cross-border transaction platform. Okay, Ethereum, which is the blockchain of the Ether, was able to build out the Ethereum blockchain with Ether back in the day.
Nobody said anything.
No one said anything.
It was fine.
Why are they saying it now? Well, now they're saying that Ether is okay. It's not an SEC mandated security or regulated security because Ethereum is no longer using Ether to build out its platform, but XRP is, and it's just
okay. So and for which, by the way, in order for Ether to be looked at as not a security, it was William Hinman and Jay Clayton at the time who looked past the initial coin offering that Ethereum actually did to raise the money for the platform itself. Here is the second clip that I want you to hear. Take a look at this.
Security or regulated security because Ethereum is no longer using Ether to build out its platform.
Little overlap,
XRP
but here
is, and it just sounds so capricious, and it's hard to get. I did a lot of people who brought the case against Ripple. It's hard to square what happened with Ethereum with what's happened to Ripple and why Ripple is held to this level and Ethereum is not. So I come down to this, and I think this is the most common sense thing here. Crypto needs to be regulated. You know it, I know it. The internet was somewhat regulated. It needs to be regulated in a smart way. Hester Pierce, the crypto mom, she's known because she's an advocate of the industry, says, let's have a safe harbor timeout and just kind of put our heads together and figure out a way to do this so we don't stifle innovation.
You don't want to suffocate something, but by the same token, it's all fun and games till somebody loses an eye or a huge amount of money.
People know what's going on with these things. It's not. If you buy XRP, you don't know what Ripple's trying to do with XRP. I mean, nothing in the SEC lawsuit against Ripple said they were ripping people off. I mean, I looked. It was their big thing was not going before the SEC and get their getting anointed by Gary Gensler or Jay Clayton when he was running it.
Well, we'll see. We'll be watching what. Gary
I mean,
Gensler does.
I know people like you want to regulate everything.
Hey, I'm all about free love, naked, free everything. Let's go for it. Just kidding. I mean, listen, I agree. You don't want to stifle, but you can't have something crazy going on.
What did you just say?
I'll tell you what I'm about to say, folks.
And there you go, right there. Look, first of all, Liz Clayman, Charles Gasparino, bringing attention to this is absolutely paramount and huge, and very grateful for the light that they're shining on it. We need to continue to help them understand and get the clarity they need. And here's just a bit more of it here. This is from Stefan Huber here, who's showing comments from Joseph Lubin back in the day. And it says right here, it's bewildering. XRP is effectively a totally useless token, except that it is being used by Ripple to make a lot of money to fund their activities. Joseph Lubin in January of 2018, just 6 months before the Hinman letter or speech came out, for which we certainly believe he could have been a part of the drafting of that, because we know that Consensus and the Brooklyn Project, for which he was a part of, were also consulting and meeting with the SEC, not only about Ethereum, but other digital assets as well. And we know how they felt about the competition, which they knew was Ripple and XRP. And how did they know that? I'll tell you how did they know that, because this appears not only as was Joseph Lubin consulting with the SEC to advance Ethereum, but also to harm the competition XRP. Questions: was it SEC regulatory protectionism and collusion? Very serious. Wonder if Joseph Lubin cares to talk about it now. And then here we have this. This is a clip from the Digital Asset Investor, and this is on 8/19/2018. And listen to this. While the entire industry and Ripple were begging for clarity, this guy acts like he is an SEC commissioner. This cannot stand. Disgusting what he is told by the SEC. And we know for a fact that they were absolutely working together with the SEC for the clarity while consulting about other digital assets. And I'm going to pick this up.
I mean, you mentioned obviously Hinman's comments, but my thesis is that where they consumer utility tokens. So I think we're still in that phase where the SEC is communicating that we understand this is something new and it's going to be an incredibly valuable technology, but we also have rules, and all the projects out there need to pay attention to rules that are in place to preserve the sanctity of markets and consumer safety. So,
and where's his confidence coming from at this point? Well, I believe it's coming from the fact that he knew for months he had been meeting with the SEC and consulting with them on how to draft and sculpt all of this framework that was to be coming out through the delivery of this Hinman speech. And he can sit here with all the confidence in the world because he knows exactly what's going to be said and what had been said the day before, right?
I'm pretty comfortable in this country and in various countries around the world that the securities law issues are pretty close to resolved. And I do think that there are going to be some bad times for some projects going forward, but I think that's going to be a very good thing. Getting clarity with respect to regulation is going to really kickstart or re-kickstart the token ecosystem.
Well, it'll be very.
And there you have it. And it was actually a month before that the speech came out. So excuse me for that. But the reality here is this guy is operating with all kinds of freedom and confidence, knowing that he's not going to be attacked or really intimidated by the SEC as Ripple later was. And then you talk about understanding motive. And this is for Charles Gasparino and anybody that's not aware of it. If you're looking for motive of why was Ripple targeted and not somebody else, it was to stop Ripple and XRP. Did you know that Vitalik Buterin crashed on the couch of Stephen Thomas and worked at Ripple for a few weeks? While there, he learned about smart contracts and Codius through Ripple and Stephen Thomas, then quickly and abruptly left and created Ethereum. Now, this is thanks to Rob Licker right here, who is one of the good guys out here. And he brought this question up basically himself by saying, where did Vitalik get the idea for smart contracts from? Maybe Stephen Thomas, perhaps, in Ripple? Seems like his internship at Ripple was productive after all. The truth is coming, Joe Lubin. Can't innovate, just steal something and then bribe your way to success and winning? Not. And I tell you, I think there really is a there. And then when you wonder about motive, where's the motive for the regulators? Well, I don't know. Maybe it's the fact that they all seem to leave the public sector and go cash in, which is not uncommon. But in this particular instance, when you're making rulings and decisions for which you tried to passively aggressively as a professional lawyer hide behind your personal opinion and then watch it be adopted as guidance from the SEC and every other official and staffer, this looks like corruption and collusion. It doesn't look like a mistake. It looks like intent. Criminal intent is what it looks like. And then we see here Brian Quintez finds himself sitting beside Bill Hinman, where Andreessen Horowitz, which is invested in Ripple, but also invested in Ethereum. Now, this looks very cloaked to me, that you would choose to take a position in a company, which is not uncommon to go to the public, from public to private sector, but you would choose to take a position in a company that absolutely benefited from your regulation and your supposed personal opinion. That's going to do it for me. Make sure you hit the like and subscribe and leave a comment below. This is not going away because they don't have the truth on their side. Fortunately, we do. Make sure you hit the like, subscribe, leave a comment below. Check out all the links in the description and comment section. Listen, ladies and gentlemen, I Trust Capital is the best crypto, gold, silver IRA on the planet. The only thing better than buying crypto is buying tax-free crypto. But you got to click the link. I'll catch you on the next one.